Assalamualaikum and hello everyone. Welcome to our presentation on Goods and Services Tax, which is GST, and Sales and Services Tax, which is SST in Malaysia. These two taxation systems have played crucial role in our country's fiscal policy and economic structure. I am Farah, and together with Aina, Anis, and Aisha, we will guide you through a comprehensive analysis of both systems. Our presentation will be divided into 5 parts, which is the first one, the implementation process of GST and SST. Second, the key differences between both tax system. Third, which tax system yield higher government revenue. Fourth, their impact on consumer prices with an example from the retail sector. And the last one, why Malaysia continue using SST despite the advantages of GST. Let's begin with the first question.
The implementation of GST in Malaysia follow a multi-stage value-added model. This means that GST was charged at every level of supply chain, from manufacturer to wholesaler, retailer, and service provider. Businesses collect GST on the sales and could claim input tax credit on the GST they pay for purchases. This helps avoid double taxation since only the final consumer actually bore the tax cost. GST was clearly shown on invoice, making it transparent for consumer and easier for businesses to manage. The structured reporting system encourages compliance and reduces tax evasion. On the other hand, SST is a single-stage tax system. Sales tax is charged only at the manufacturer or import stage, while service tax is applied at the point of service delivery. Unlike GST, SST does not allow input tax credits. This means businesses cannot claim back the tax they paid, which leads to the tax being included at the final product cost. As a result, the consumer pay a higher price without clearing seeing the tax amount. SST is more simple to administer but is often critiqued for being less transparent and more prone to issues like tax evasion and misclassification.
The Goods and Services Tax, or GST, was introduced in April 2015 and abolished in June 2018. It is a value-added tax applied at multiple stages of the supply chain, making it a multi-stage tax system. One of GST major features is the input tax credit mechanism. Business can reclaim the GST they pay on input, which increase transparency and help reduce the overall tax burden. In contrast, SST is a one-stage tax system that was reinstated in September 2018. It included the sales tax applied to manufacturers at rate of 5%, 10% or special rate, and the service tax charged at 6% on selected service. SST does not allow input tax credit, which means business cannot recover the tax they pay on input. This increases the cost of doing business. However, SST is easier to manage, especially for small businesses, because it has fewer reporting requirements. But one drawback is transparency. While GST is shown clearly on receipt, SST is often embedded in final price and not easily visible to consumer.
Okay, next, which system yield higher revenue? In terms of revenue collection, GST yield more revenue than SST and considered more effective compared to the SST. According to fiscal report, GST is described as unmatched, highlight its ability to collect higher and more effective revenue for the government. This is because GST is charged at every level of supply chain and its detailed reporting system make it harder to avoid. The input tax credit mechanism also ensure accuracy and accountability throughout the tax process. SST being a single stage tax cover fewer part of supply chain and is more prone to leakage and tax evasion. As a result, the government collect less revenue under SST than it did under GST.
Both GST and SST affect consumer prices differently. SST is often considered less transparent because the tax is usually included in the final price of goods or services. Consumer can't always see how much tax they are paying, and this can lead to what's called the cascading tax effect. This effect happens when tax is charged more than once along the supply chain, increasing the final price. For example, if both a component and the final product are taxed separately under SST, the consumer pays a price that includes both tax amounts without realizing it. GST, on the other hand, is more transparent. Tax is clearly shown on invoices or receipt, and because businesses can claim input tax credit, there is no double taxation. This helps keep the final price fair and avoids artificial price inflation. Take the retail sector as an example. If a consumer buys a smartphone under SST, the sales tax is already built into the price. The consumer may not realize how much tax is included, but under GST, the tax is clearly shown. For instance, a phone might cost 943 ringgit 40 cent plus 50 ringgit 60 cents GST, totaling 1,000. This helps consumers understand their tax contribution better.
Even though GST is more efficient and generate higher revenue, Malaysia still uses SST due to political, social, and economic reasons. When GST was introduced in 2015, it faced strong and public backlash. Many people, especially from lower and middle income groups, feel that GST increased their cost of living. Although some items were zero rated or exempted, the tax was very visible and made everything seems more expensive. SST, by contrast, is less visible because it's embedded in price. This makes it more acceptable to the public, even if the overall tax burden is similar. Another reason is that SST is simple to administer. For small businesses, GST reporting requirement and input tax credit system can be difficult and costly to manage. SST reduces paperwork and it's easier for businesses with limited resources. Lastly, during time of economic instability, government may avoid GST to prevent adding financial stress due to public and businesses. SST, with its smaller tax base and lower visibility, is seen as a gentle approach during such time.
To conclude, both GST and SST have their strengths and weaknesses. GST is more effective in generating revenue and ensuring transparency, but it was removed due to the public assistance and its complex system. SST, on the other hand, is easier to manage and more publicly accepted, but it lacks the transparency and efficiency found in GST. The government decision to implement SST over GST reflect a balance between revenue collection, social acceptance, and administrative simplicity. As Malaysia continues to grow, the choice of tax system will remain an important topic, especially when considering the needs of the economy, businesses, and the people. It is essential to keep reviewing and improving our tax policies to ensure fairness, efficiency, and sustainability for the future. That's all from us. Thank you for watching.